All right, Ford shares. Let's see how they're doing after hours, dropping not terrible, but down 1.8% at this hour on Q3 earnings. What lies down the road for Ford? David Kudla is the Mainstay Capital Management Founder, CEO, and Chief Investment Strategist. And Pras, Subramanian, our senior autos reporter, also with us to break down these earnings. It is nice to see you, sir. So what do you make, David, of these earnings? What do we learn that we didn't know from their pre-announcement?
Probably the biggest news is Argo shutting down their joint venture with Volkswagen on their level 4 autonomous. Looking inward, Jim Farley wants to look inward at level 2 and level 3 internal development for their autonomous efforts. That's probably the biggest news. Relative to the numbers, though, $3 billion more than estimates on revenue. 30 cents per share versus 27 on estimates, liquidity, cash on the books. This is a good earnings report, except for the $2.7 billion charge you're taking for divestiture out of the Argo joint venture.
Hey, David, Pras here. So we saw that Ford reaffirmed their forward guidance, EBIT guidance for the lower range of 11.5 billion EBIT there. So that's good news. But compared to GM earnings yesterday, do you think that Ford is still sort of struggling with their kind of cost structure and how GM is able to sort of perform better here?
Yeah, there's been some special factors with, from quarter to quarter. Ford had built 40,000 vehicles in the third quarter that didn't get shipped. General Motors had a similar problem in the second quarter. Vehicles that were built that weren't shipped. This chip shortage has just wreaked havoc with the automakers and gone on for months and months and months, and other part shortages. So the same problem that GM had in the second quarter that actually increased vehicle deliveries of finished product in the third quarter, Ford will get that in the fourth quarter, so a special item there. But this has also resulted in a lot of pent-up demand, even as the economy slows, that will help even as demand fluctuates, consumer demand fluctuates with higher interest rates, with the economy slowing, a lot of pent-up demand for autos.
And Ford shares now down 2%, down 40% year to date, and down 19% since that pre-announcement of that $1 billion charge and the 45,000 cars parked. How do you characterize their position in the EV field? Not against Tesla, who sells 2 out of every 3 EVs, but against primarily GM.
Mm-hmm. I think that I've got a saying: GM and Ford, the domestic automakers, are underloved and underowned. They traded a PE right now of 5 to 7. Tesla, before the recent slide, was trading at a PE near 100, and the reason for that is Tesla is seen as a technology company rather than a car company. GM and Ford are seen as as car companies and car companies only, even with all the technology development they're doing in many of the same areas as Tesla. I think that they're both poised well right now going forward. They have so many EV models coming out, almost everything they make, the F-150 electric vehicle, the Lucid electric vehicle coming out, the Hummer electric vehicle, that is sold out through 2024. They've just got so many EV models that are coming. They've been managing that transition pretty well. And from a practical standpoint, there's been questions about autonomous. Tesla's pushed autonomous very hard. And I think that GM and Ford are taking a more practical approach to it. And Jim Farley showed that today with backing out of the level 4 development that had trouble attracting investors, focusing inward on their level 2 and level 3.
Good stuff there. David Kudla, Mainstay Capital, Pras, Subramanian. Good to have you both. Thank you.